Hello, this is Sausan Abdul and with me today is Sumaya Al-Jaziri to discuss her latest report on Bahrain titled Bahrain Special Between Achievements and Acceleration Toward Targets. Hello, Sumaya.
Hello, Sasan. Thank you for the introduction. Yes, we recently published a comprehensive report which analyzes Bahrain's economic growth recovery, fiscal position, debt trajectory, strategic investments and projects aligned. We also shed light on the progress of the fiscal balance program and the risks and challenges Bahrain faces.
Sumaya, let me begin with the title Between Achievements and Acceleration. What can you tell us about it?
So yes, as I describe it in the report, 2022 can be best characterized as a year of acceleration and diligent movement towards crucial targets set for the achieving of the fiscal balance by 2024. We do have a year and much to achieve, but also looking back since the launch of the FBP, a lot has been achieved, especially in showing fiscal discipline over the last 5 years. Now, there's more to this, but we definitely are heading in the right direction. The government's prudent management of recurring expenses translated into a decline in expenditure on two main categories, the wage bill and subsidies. The key challenge, though, remains in managing its debt servicing cost.
Looking at the economic recovery, what can you tell us about it?
So, average real GDP growth over the first 9 months of 2022, as per the latest available data, has reached 6% and has been predominantly driven by 7% growth in non-oil GDP. Now, Bahrain's real GDP is expected to exceed 13 billion Bahraini dinars in 2022 and 2023, potentially the highest in a decade, driven by non-oil GDP growth and a greater private sector contribution. Non-oil GDP growth is expected to plateau in 2023 at the 10-year average of 4% as per our expectations. Over a decade, though, from 2012 until 2022, we've seen a solid 3% compounded annual growth rate in non-oil GDP growth.
Sector-wise, how are these sectors doing?
So yes, we do go into detail in the report on the sectors. On a high level here, though, I can say that we've seen growth across the board, especially in the construction sector, and that has been driven by the support of the GCC Development Fund and funding the key infrastructure projects. The manufacturing sector has seen growth, and that has also been translated in the increase in our exports, national exports. Growth in the retail and tourism and telecom and logistics sectors, which has also been a focus of the government into diversifying our economy, has been solid. And here, let me point out that we should look at the growth from 2011 until 2019 to really gauge the growth in these two sectors. And we've seen mid-single digit compounded annual growth rates in these two sectors. You're talking about 4% growth in the retail and tourism sector during this period and 5% compounded annual growth rate in the ICT, the telecom and logistics sector, and transport as well. So returning to such levels of growth in the medium term would be advantageous for Bahrain's economy. And I say that because these two sectors have been impacted in the last 2 years. And so that has slowed down the growth in them. But we are seeing a recovery, and returning to these medium level growth rates would be very crucial.
Fiscal discipline over the last 5 years, what has been achieved?
So let's look at the 6 pillars set in the fiscal balance program, the 6 key pillars. And then there were also metrics added to kind of measure the accomplishments against these pillars set. What I'll do here is just give you a brief of the headlines of these pillars and what has been achieved. So starting off with the first one, reducing the government operating expenses. And on that, we have seen current expenditure being relatively stable. I mean, you're talking about 0.25% compounded annual growth rate in 3 years. That's almost kind of a plateau level of growth. The wage bill has declined by 1% during this period, which is commendable. The other pillar was introducing a voluntary retirement scheme, and that has been done. As per official figures, the cost saving achieved from this has been 130 million Bahraini dinars annually. Third, which is a key pillar here, and I'm going to elaborate on this, is balancing EWA's expenditures and revenues. So just to put things into perspective, EWA's subsidies used to account for 31% of the total subsidies in 2018. at the beginning of the launch of the FBP. And by 2021, that has been reduced to 9%. The actual expenditure on EWA subsidies was 189 million Bahraini dinars in 2018, and that has been reduced to about 48 million. So we've seen significant improvement. The total subsidy bill has been also reduced. And this takes me to the pillar that follows, which is streamlining subsidies generally. And yes, we have seen that. The total subsidy bill declined from 619 million in 2018 to 523 million in 2021. So we have seen progress across the board in subsidies and especially in EWA subsidies. However, there has been an increase in the cost of living subsidies. And that is expected as the government continues to shield the most vulnerable. But the risk remains is that we do not want to see a whole reversal of lowering the subsidies. Now, the last pillar was increasing non-oil revenues. And this has been supported by the introduction of the VAT, excise taxation, and increase in certain fees. Overall, we've seen non-oil revenues reach or just exceed 1 billion Bahraini dinars in 2022 as per the preliminary numbers. And just to put things into perspective, back in 2018, that was 500 million Bahraini dinars. And so we've seen a twofold increase in non-oil revenues by 2022.
What can you tell us about the risk and challenges?
So one of the biggest risk factors for Bahrain and GCC countries is oil price shocks, which would pressure budgets. Most GCC countries have released 2023 budgets, and in their budgets, they've increased the oil price assumptions. We expect Bahrain to follow suit. But any global event, external shock to oil, resulting in oil prices plunging, would exert downward risk on our budget. Therefore, it is really important to continue growing non-oil revenues via taxation reforms, and it's necessary to hedge against any shock to oil revenues. Rising debt costs remain a challenge for Bahrain. Although improving, financial economic metrics would result in an upward credit risk re-rating of Bahrain, and that would potentially contribute to lowering future pricing of any issuances, costs of financing. Yet the financial burden of debt servicing costs continues to be high. So therefore, disciplined dedication towards meeting the FBP's debt to GDP targets is critical here. And lastly, there's an extensive pipeline of projects which will require continued public-private partnerships and attracting more FDI investments to fill in the post-GCC Development Fund period. And so these are the risks. You have also inflationary pressures to deal with. You have higher interest rate environments, and these are external risks that we also have to take into account.
Any concluding thoughts that you'd like to share with our audience?
Well, to summarize, this 30-page report here is challenging, but what I will say is this. Brent, the oil prices, I mean, averaged nearly around $100 per barrel in FY 2022. So accordingly, achieving fiscal balance at such high levels of oil is possible, but likely not sustainable. And so going ahead, if Bahrain has to address its rising debt servicing costs, as I just mentioned, it either needs to further reduce subsidies, encourage more Bahrainis to move to the private sector, which we've seen that this is also something we discuss in the report. We've seen that happening, and that is due to the narrowing gaps in the average wage between the public and private. But that has to be further encouraged and sustained. And additionally, it will have to also look at further avenues to raise non-oil revenues, while at the same time ensuring the most vulnerable segment of society is shielded. And we do emphasize that. The country has taken several steps in the right direction. However, measures such as imposing corporate tax, similar to the UAE, and also Saudi has recently announced the revision of its zakat and taxation. So we see the inevitability of introduction of corporate tax, and this is crucial. And streamlining subsidy structure are also other possible ways to achieve fiscal targets. And so with that, yeah, I would end my concluding thoughts.
Thank you, Sumaya, and thank you for everyone for listening. You can access this report on our website, research.sicobank.com.